We're going to do a brief video on the emini futures today. We are logged into rbandresearch.com and we're looking at a chart, a daily chart of the emini futures. Let's take a quick look at the technical part of it, and then we'll talk about a few things that are really interesting about the emini futures. The first thing you can see, this is a daily chart again of the S&P 500 on the Chicago Mercantile Exchange, daily bar chart. And if we crunch it together real quick, we can see that this long-term trend is definitely in a bear market for the S&P 500, and the futures market's no exception. Again, this chart's showing the futures, and you can see that it was in a very tight, nice bull market here for a long time, and now we've rolled over. We went flat, and the 200-day moving average is starting to roll over. We have a 200-day, a 20-day, and a 5-day moving average on this. You can see that the 20-day down here is going flat, and the 5 days above the 20. So we're getting a short-term little rally here, but in general, this is still in a bear market, and we're significantly below the 200-day moving average. The S&P 500 can be used, obviously, to take a futures position in the S&P 500, but that's the way a lot of people use it. But it's a fantastic contract to trade options on futures, and also to day trade with straight out just taking a position in the futures contracts. The reason for that is it's ridiculously active. Let's take a look real quick. I'm widening this out so you can see it. Let's take a look at the volume. The volume indicator is here, right here. You can see that's for the 7th. You can see we had 1.64. Again, I'm right up here. 1.64 million futures contracts just in that day. Again, you can see that was not even a high volume day for them. Here's a 2.2 day. Again, 1.5 million, over 2 million, close to 2.5 million. These volume numbers are ridiculous. If you get a 300,000 day on a futures contract, that's a good day. So the S&P 500 E-mini, and you have to be particular about that. The symbol's ES, and so we're talking about the S&P 500 E-mini futures contract is a ridiculously liquid contract, and so it's perfect for day trading, it's perfect for options on futures, and it's perfect for trading enormous positions as a regular just long-term position trader if you have the money to do that. So those things, those attributes about it make it a fantastic instrument to trade. I know people who do nothing but trade the S&P 500 E-minis, and have gotten very rich doing it. So it's well worth paying attention to, because you can do things with the E-minis that you can't do with other futures contracts. The concept of liquidity is not appreciated until you're stuck in a position and you can't get out of it. And I'm going to scroll down in a minute and show you some of RBAM Research's algorithmic entry points, and I'll point out how illiquid some of them are at some periods of time, depending on how large your position size is. But the concept of not having a liquidity in the S&P 500 E-mini it's not inconceivable, but you have tremendous liquidity. Thousands of contracts per minute are traded usually in a regular market for the E-minis. So you can pretty much do whatever you want to do with it, and it's also what I call an honest market. If you look through this chart, you can scroll back. I don't see a single gap. I'm sure there's some. We've got it scrunched together. But this market is an honest market. It does not gap significantly, usually. Of course, there's always exceptions. And that tells you that this is a very, very tight market to trade. Can you lose a fortune in this market? Yes, you can. But you're probably going to lose it because you just put the wrong directional trade on there. There's not a lot of gaps. I saw some $50 gaps yesterday in some stocks, and when you see those kind of gaps, it's outrageous. But this S&P 500 E-mini is a great contract to take a look at. Of course, everything I'm saying is in my opinion, but it is a great contract. Let's scroll down here real quick and see what RBAM Research does. In general, if you were going to trade this without our type of entry points, you're moving into a sideways direction here, and so using moving averages here is beginning to get very difficult. You're going to get whipsawed. You can see you could have used them here when the 20-day moving average was pretty much below a 45-degree angle down, but now that it's gone flat, you're in a pretty much a little sideways market here, probably until around this point at the end of June. So let's take a look at how our prices come into play. We have algorithmically generated prices down here. We're looking at stocks now. Let's scroll down and get the S&P 500. So here's our futures. So this is the S&P 500. ES is the ticker symbol for the E-minis. And each day before 7 a.m. we post either a buy or a short signal for various holding periods. You can see we have 1, 2, 5, 10, and 20-day holding periods. And I'll describe those, how they work in just a minute. Today you can see there's nothing for a 1-day short, and that's almost always going to be the case. But it does have a 2-day short price to take a look at on here. These are just recommended entry prices. You have to use your own judgment. You can never use these blindly. You have to always back it up with your own judgment and decide what you want to do on your own. But this is recommending 41.72 and 0.75 as a potential short to make some money on a 2-day hold. Now, the way the holds work, if you were to get in this today, go short today at this price or roughly this price, assuming your own analysis validated it, you would be prepared or should be prepared to hold it for 2 days. You take your profit as soon as you get it. If you don't get a profit, you close it out, worst case at a loss, at the end of the 2-day holding period. These are trading days, 1, 2, 5, 10, and 20 holding day periods, not trading days, not calendar days. So with this price, this 2-day price, you can oftentimes day trade this price. The market's so volatile, the S&P E-minis are so volatile that if it hits your 41.72, there's a really good shot you can day trade out of that the same day. There's no guarantees, but it's a very volatile contract, and you can trade out of it usually. If it moves in your favor on the first day, you can usually get out of it. However, under the way this model's built, this algorithm is constructed, you should always plan on holding for the 2 full days and closing out a loss if you don't get out sooner. So you take your profit as soon as you got it, and worst case, close out at a loss at the end of the second trading day. So in today, tomorrow's the first trading day, the next day would be the second trading day. And again, those are trading days, not calendar days. Same thing down here on the 20-day. If you got in short at 41.61 and change today, assuming your own analysis said it was good, you take your profit as soon as you got it, even if it was the same day. Worst case, you close out at the end of 20 days for a loss if you did not take a profit in the intervening period. So that's how this works. Again, we publish this, all this data, before 7 a.m., Monday through Friday. On the futures, we have the S&P E-minis, we have crude oil, gold, and T-bonds. Now let's take a look when we're talking about volume. You can pretty much do anything volume-wise with the S&P 500 E-minis. Crude oil, as liquid as it is, sometimes you get as many 300,000 contracts a day. You usually get 150 on average a day, 150,000 crude oil contracts a day. But if there are times in the day, if you try to trade out of even 100 lot on a crude oil futures trade, you'd have liquidity problems. Not all the time, not most of the time, but some of the time. You're in general, again, this is my opinion, but in general, you're not going to have a problem getting out of 100 lot on an S&P 500 trade. Now, I know the 100 lot may sound like a lot, but if you can't get out of 100 lot, I would have problems, personally, I would have problems trading any market where I couldn't get out of 100 lot, even if I'm only going to trade a 1 lot. It's just not enough liquidity for me. Same thing down here for the bonds. For treasury bonds, there's a lot of times it's difficult to get out of a 10 lot. Now, is that consistent throughout the day? No. There's some times you can't get out of a 10 lot, at least in my opinion. So, and when I say get out, I mean get out right now. Of course, there's liquidity in all these markets. But when you're day trading and something's wrong and you want to get out, you want to get out. And sometimes you can't do that in the bonds and crude oil, and I'm sure gold is the same way, although I haven't looked at it lately. But with the S&P 500 E-minis, in my opinion, you're going to have tremendous liquidity and very little headache moving in and out of positions, especially if they're tiny positions, 1, 10, 1 lot, 10 lot, so forth, the common positions that most small traders would trade. So that's something to keep in mind. Again, it's all in my opinion. You have to do your own research. We also offer cash forex. This is an interbank market. All the major pairs, again, buys and shorts, same thing as the futures. And we offer Bitcoin buys and shorts, again, same as the futures with the holding periods. If you'd like to get these every morning before 7 a.m. for absolutely nothing, they're 100% free, no credit card required. You can do that at rbamresearch.com. You just follow the link in the description below and register. You get 190 stocks. They're longs only. The major forex pairs, crypto, and the S&P 500 E-minis, as well as crude, gold, and T-bond futures. Again, 100% free, no credit card required. Just go to rbamresearch.com and you can get them before 7 a.m. You get them 24 hours a day, 7 days a week, but they're updated Monday through Friday, 7 a.m. during the week. If you like this video, please hit the like button. If you want more of these videos, please subscribe. And if you'd like to make a comment, please do that. Everything that we've discussed and everything on this website is for entertainment purposes only, including the entry prices. You cannot use them as a point to get in. You have to use them or you may use them as a reference point for your own additional analysis. Please consult a financial advisor if you think you need one, and you definitely trade at your own risk.